very personally invested in. This is the issue of debt, something that is needed in day-to-day life. There's hardly anybody who doesn't have any sort of debt. But what happens when life throws you a curveball and you're no longer able to meet your financial obligations? Well, in an event of something of that nature happening, consumers are advised to take out what is called credit life insurance, as their debt doesn't disappear when they die. Their debt, doesn't disappear when they lose their jobs. It remains there until it is paid, and somebody has got to pay it. So in the event of somebody dying, their debts are generally paid out of the money or out of the property that has been left in their estate. Now, in the event that the estate cannot pay that debt and there's no one who shared responsibility for that debt, it may go unpaid in that particular instance. But here's an expert to help us unpack this a little bit further and give us all the nuances that are involved in these various scenarios. It's Salem Nyati, Consumer Financial Education Specialist at Momentum Group. Welcome to African Business. So good to have you with us.
It's so great to be with you, Thami, and thank you so much, and greetings to the listeners.
Now, what an important topic to discuss. I was just saying earlier on that, debt is so much a part of our lives, so much a part of our existence and reality. But what happens to that debt if, for example, somebody dies and there is no estate to settle that debt, or there's no insurance to cover that debt?
Thami, a lot of times we see this. We hear stories that now the children are being harassed, or the surviving spouse is being harassed. Sometimes what happens is that there's a repossession, maybe. Let's say the house, now they can't pay the house, and then all of a sudden the surviving spouse or the children are left homeless. Or there's just family feuds. But here's the thing. There is this insurance called credit life insurance or credit life cover that a lot of people are paying for, but very few people claim for it or are aware of it. And this is an insurance that doesn't just, kick in when you die, but it also kicks in when you are retrenched at work, when you lose your job, or when you now have an illness, a disability, that's what I meant to say, a disability, whether it's permanent or temporary, where you can't earn an income to actually pay for the debt. So what this insurance does, it covers the life of the credit. That's why it's called the credit life cover. For as long as that debt is still active, this insurance kicks in. And many of us, Thami, are paying for it right now.
So could we, Salem, is it safe enough to say that if you've got a bond and your property is bonded, that then is a very high likelihood that you actually do have credit life insurance for the life of that bond?
Correct. And in fact, the reason why many people don't really notice this insurance, Thami, is because, for example, for normal credit like personal loans, credit cards, clothing accounts, car finance, you pay R4.50, or the law says cap it at R4.50 for every 1,000 rands that you owe. So now if you owe, for example, 4,000 rands, you may not notice that 18 rands that goes out, right? Same with your bond, same with your car, etc. Many of us are sitting with that insurance for our bond repayments, for our car repayments, our personal loans. And what do we do when we lose our jobs? We go and make arrangements. We take ourselves through drastic measures like debt review, for example, whereas all you need to do is claim for the insurance, because nobody's going to claim for the insurance for you. And what it does, Thami, while you are out of the job, you're looking for a new job, it continues to pay that installment for 12 months. After 12 months, you go back to the credit provider. If you still have not received a job, to say, here's my retrenchment letter from the last time I claimed. I still haven't received a job and I'm back again to claim for another 24 months. Depending on the kind of credit it is, they may say, we will settle this debt or consider the debt settled, or your insurance will settle the debt. But people need to claim. And you look at your statement, Thami, there's something that's written there on your statement that says CPP. That's your credit life cover right there. But you know what we don't do? We don't read our statements.
Hey, all you want is give me the money so I can get my house.
Mm-hmm.
And
Sign, initial every page.
Do you know what I mean? Just sign initial, you're busy initialing, but we don't read the finer details, which we actually need when, fortune changes. But I wonder, Salem, this works really nicely for people who are full-time employed. But what about people who own their own businesses, who are entrepreneurs or who are contract workers? I have found that some of these credit life insurances will have that as an exclusion, saying if you're a contract worker, you're not going to be covered if your contract ends, for example.
Thami, in 2017, the National Credit Act introduced an amendment to the credit life cover insurance to say that it should actually be part of any credit agreement. And it doesn't say you should be working like this or, permanent or contract for as long, because remember the focus here is the credit agreement, not necessarily you. So the moment they give you this credit, you can get the insurance for the credit and not be denied insurance for the credit. So that should you not have income to service the credit, then the insurance that you've been paying for that should then kick in. So it's yeah.
Is it legal? Is it legal? Is it lawful for them to exclude certain types of payments?
No, Thami. They shouldn't, because according to the law that governs credit agreements, it should be included in your credit agreement. So nobody can prejudice you, because that's then discriminating, that's being unfair. Why are you giving me the credit then if you feel I don't qualify, and then make certain exclusions that are unlawful, like I can't protect this credit? If you feel that I don't qualify for whatever reason, then I shouldn't get the credit, instead of you plunging me into it, but then you say, oh no, you can't protect it with any form of insurance.
What happens if somebody's listening to this, Salem, and they're saying, I wish I knew this 3 months ago, or I wish I knew this a year before? Can you now claim, perhaps retrospectively, can you claim on a debt that you've negotiated terms on, and maybe you've already, settled that debt, but it was really, really difficult for you to do that?
Unfortunately, Thami, think of any kind of insurance. You've been in an accident and you took your car to the mechanic instead of claiming, right? So it's that kind of thing as well. Unfortunately, if you haven't claimed for it, then you can't then go back and want to restart the process. And that's why we're educating consumers to say, the first thing you need to do, if you already have existing credit, is to look at your statement. Go and find that line item, over and above that capital amount, the interest that's being charged, the number of installment months. There should be something that says CPP, Credit Protection Plan. If it's there, then you know you're covered. If it's not there, contact your credit provider to make sure that you have credit life insurance. So it's very important, the first step, to go to your actual statement. A lot of credit agreements, Thami, they come with this credit life cover anyway now, since August 2017. But it's always good for consumers to make sure. And anybody who's taking up new credit, make sure that by the time you sign and you take out that credit protection plan, that credit life insurance is in place. And it's an amount, Thami, that will go out every month, bundled in your installment. So it's calculated in.
And ignorance is the one thing that will kill us all. So it's there, use it. Salem Nyati, thank you for a really, really important conversation. Some pearls of wisdom shared there. I hope everybody who's listening will go through their statements really, really carefully and make sure you've got that credit cover. You probably do have it. So then use it. Salem Nyati, thank you so much.
Thank you so much, Thami.
Thank you. She's a consumer financial education specialist at the Momentum Group. Credit Protection Plan is what it's called. It's gotten exactly 4:53.